PrimeXPT is the most powerful trading platform offering immediate access to over 30 assets. Trade cryptocurrencies, forex, commodities, stock indices, and much more, all from a single Bitcoin settled account. Visit the link below and start trading on PrimeXPT in minutes.
Birb Network is an interoperable DeFi ecosystem offering token pre-sales, staking as a service, project incubation, and much more. Visit thebirbnest.com/Ferrum. Globe is an upcoming crypto derivatives exchange offering up to 100 times leverage on crypto and DeFi perpetual contracts. Sign up for early rewards at thebirbnest.com/Globe. Radix is the first Layer 1 protocol built specifically to serve DeFi. More information at thebirbnest.com/Radix. YFDAI is democratizing finance by creating the most secure, transparent, and user-friendly ecosystem of DeFi products. To learn more, visit thebirbnest.com/YFDAI.
Hey everybody, it's Birb here, it's Adrian. Hope you guys can hear me okay, can see me okay. Just let me know very quick in the chat if that is the case, because, well, I'm very happy. I'm very happy to welcome each and every single one of you, well, to today's Congress show of mine, followed by the name Top 5 Technical Analysis Tools that really work, with this tiny difference that besides of those top 5 technical analysis tools, I also want to bring to you a couple of more insights, okay? A couple more tips and practices that I personally use to predict the major reversals in the market. And, well, shall we go? I'm very happy because this is day number 8 out of 14 for our 14-day free trading congress, guys. And you are participating in something really special. You're participating in something really big, okay? We are celebrating the entire community, the Birb Nest. We are celebrating, well, the huge milestone that I actually broke on myself and as the whole company, as the whole brand, of 200,000 followers back a month ago. Right now, I'm actually approaching 250. So I wish I could host probably 300K celebration anytime soon, but it would need to be in a 2-week. And if we go and follow that path, it would mean we would have celebration every month for another 100,000 milestone. So that is kind of like funny. But I really want to give back to the community. You know, the reason why we are hosting those amazing value flipped and value filled equipped shows, you know, on a daily basis with you guys for the past 8 days, is to deliver value, is to actually teach you something valuable, to teach you something practical, and to show you that it's really possible to fucking make it in this market. You know, it's really possible to chase your dreams. It's really possible to achieve your dreams and achieve your goals. And, well, I'll show you how. To start with, I want to bring the bit of theory. I am a person who believes that theory should always, well, precede the practice. That we should always see the theory concepts being, well, absorbed and understood in the comprehensive manner. Firstly, before we go and well, try to, you know, just really break our limits, break our barriers with the trading in practice, if you know what I mean, right? So the theory should come always first. Otherwise, you are joining the so-called dumb money, okay? So dumb money are the people who have just joined. And this is not really, well, this should not be ever taken as an offense, because if I am new to a market, if I'm just joining a market, I could not expect myself to be a, well, proficient trader. I cannot expect myself to be a professional, let's say, expert, right, in the field. Like, it always comes with time, patience, and a lot of knowledge that needs to be actively absorbed. Okay, so when you join, you are new. You have to acknowledge that you know little. You have to face the reality. Okay, you should never live in your own delusional bubble full of imaginations and, well, never met, you know, in practice. if you know what I mean, right? So you have to, like, because sooner or later, you are literally going to, well, get the punch in the face from the market, right? Like it or not. And what I guys want to follow in the most with you is to start it with the technical analysis. Okay, so the way we're going to host this is I'm going to get you 5 best tools, or actually there are going to be more of them, but 5 main practices I follow to be able to really, get out of the market the most you can. Okay, and before we hop to the TA section to start with, I really want to make sure, guys, so that you remember to subscribe, like, and put your thumbs up, on this video. If you enjoy all the free content that I'm sharing on Twitter, if you enjoy all the free content that we share as the Birb Nest within this Congress and outside, make sure to subscribe. Push the subscription button, put your bells on, so that you don't miss out on the next videos, which are coming and lining up right after. And let's go. Let's give it a go for the technical analysis part. Okay. So as I said, the technical analysis part is going to bring you to 2 main points that I personally use. Okay, and let's just give it a go for the screen sharing. Okay, so that we can. You should be able to see my screen being shared right now. Please let me know very quick if you can hear me still, and if you can see the picture clearly. Okay, this is one example, okay, that I'm going to bring with you, and the other one is let's just give it a go like that. Okay, let's put some optimizations in here. Okay, for your own sake, let's go for the broader range, and there we go. Okay, so what you have to understand as traders is something that I partially explained on my previous webinar. Okay, on the last Friday, I believe. Oh, it wasn't actually Friday; it was a Friday before. Okay, but I hosted a session. I hosted a webinar about how to understand the momentum. Okay, and the momentum is something that that the cars have, let's say, when they're moving, when moving objects, let's say in physics have. Okay, so the momentum comes from, well, long story short, multiplying mass by the velocity. And here the mass, the financial mass, is kind of like a market capitalization, and the velocity is, well, the speed that the market is going up, let's say, right? So how much of an upward, movement it has in some period of time. And when you know that, okay, you can define the momentum. Let's say, just for your, well, okay. So there's the drawing brush. Just give me 1 second. Need to figure out the brush very quick, because it actually just somehow disappeared. There we go. Okay, you can tell, well, this is a logarithm chart, so let's make sure we actually use the linear chart. You can tell that all of this kind of like moves, all of that was pretty much like nothing compared with this. So we had some period, okay, where it was approximately sideways, let's say, okay, followed by a major upside breakout. So you can tell that this part of this entire movement is full of momentum, is strong in momentum. This side instead is rather weak in momentum. Okay, so low momentum movements are, for example, just locally this. This is a low momentum movement. When something just goes horizontal sideways, okay, it's usually slow. It's usually, well, lacking the speed. It's lacking the direction. Okay, it's lacking the momentum. It's lacking the momentum, exactly. And for that very reason, we, well, have to differentiate the strong trends, okay, full of speed, full of momentum and mass, let's say this financial market cap, and the low, slow trends. Okay, the slow trends against the fast trends, the strong trends. Okay, so again, slow, steady movements are going to be lacking the momentum. Short upside movements, okay, especially somewhere later in the market cycle phase, this is what you're going to learn that is, well, strong for the momentum side. Okay, let's just very quickly see about the new comments. Okay, and very cool, very cool. Let's just get back in here. Okay, and the momentum is again telling you the information for how much of an upside movement, which is, let's say, the distance, okay, the upside distance on a price scale, is being made within some period of time. Okay, so if it is a lot of upside distance within a short period of time, this is going to be a strong momentum. Okay, and this is going to be just like trying to stop a driving car. It would be very hard. Okay, it's much easier to stop a car which is driving slowly, okay, rather than the car which is rushing, 200 kilometers per hour, let's say. And this is the one and the same car, right? The one and the same mass. So the only part that changes the entire momentum outcome is the velocity in this case. Okay, so the velocity is literally like now you could understand that for how fast the trend progresses, for how fast this entire trend, well, let's say just, well, goes up. Okay, give me 1 second, one very quick second. Need to check something with you. Okay, I'm back. Had to make sure it's visible all well on your end. Okay, and here you can see that example of the low momentum movement that lasts for the past three months. Okay, what you can tell is that it also is structured differently. Okay, whenever the movement advances very fast, it's full of momentum, it's full of speed and mass. Let's say the financial mass, the money that are pressing upwards. Okay, then it's very hard to stop. And to be able to reverse the market, which is the most important kind of concept and point for you as traders. Okay, everybody wants to catch the bottom and sell the top. Okay, but the truth is that it's actually lower chances than the lottery. Okay, lower chances that winning the lottery is what you're going to get by trying to short the top and buy the bottom. Okay, so to be able to predict, to some extent narrow down the amount of possibilities, let's say the concepts, the scenarios that you want to take part of or take part in, okay, you have to use, multiple conjuncted scenarios and techniques, and momentum is one of them. This on the bottom is called RSI, okay, which is Relative Strength Index. And this RSI indicator is the most basic momentum indicator, one of the most basic momentum indicators, right? The most basic one momentum indicator is actually, the actual, say, difference of price, okay, in the past couple of days. Let's say when the price difference is let's say 15 units in the past 7 days, okay, then you can tell that, this is some reference point. And if you see the day or the week where there is 20 units change in the same 7 days, that you can tell that the trend is advancing, that the trend is accelerating, the trend is gaining on the momentum, okay, if you know what I mean. So here, the RSI just tells you, okay, about the past kind of 2 weeks, past 2 weeks. It compares it tells you about the relative strength of the market. So the average up days, okay, average days which closed higher than the day before, set against the days down, okay? The up days divided by the down days. This is the relative strength. And this is turned into the form of an index so that it oscillates between the 0 and 100 units, okay? And As you can tell, it does have two, let's say, zones, or actually three zones. The middle zone, which is the most neutral, the bottom zone, and the top zone. Okay, and you can tell that historically, whenever it goes, well, very high in the momentum, very high for the RSI, way above the higher, 80 boundary, 80 points, 80 units, okay, it usually comes with some reversals, with some retracements, okay. But most important point, okay, for you to take notice of, is so that you can use the momentum to understand when the trend is aligned. Let's say trend is the strongest always whenever it aligns directionally. Let's say here with the rising momentum, and here the same parallel with the rising trend, with the rising price, right? Because otherwise, you know that there are some factual momentum kind of like divergences. Okay, you can tell that here the market is making lower highs per the momentum, but higher highs per the price action. Okay, this is something that you could be worried about. This doesn't necessarily mean it's going to reverse the market and start the bear market. Okay, it does mean instead that it is somehow like a market giving you a warning. But a warning is a message, let's say, that you can read from the market in order to secure your profits, to take some profits off the table. Okay, would I believe that every bearish divergence, because this is a bearish divergence, that every bearish divergence ends with the bear market? Then I'd say no. Okay, in the bull market, you could see many divergences, many like the market being pretty much like put in here, with an like oscillating in the overbought area, which is the top one. Okay, for a long time, and doesn't necessarily need to reverse. Similarly, you could see the momentum, okay, being close to the bottom, okay, somewhere on the market bottoms as well. Okay, so the closer to the oversold area on the bottom, the better of a buying opportunity it becomes. The closer to the overbought area on the top, the worse of a buying opportunity it becomes. Okay, that is the simplest thing that you can read of it. And in fact, if you go to our website, to thebirbnest.com, okay, we are rich with infographics, which are known to be one of the best ones in the entire industry. Okay, so here you're going to literally find the cheat sheets for the divergences. Okay, so we can tell and use the momentum to play along with the trend, let's say. Okay, so that you know that the trend is the strongest whenever it progresses in the same very direction. Okay, the lines directionally with the price action, and whenever it stops, let's say, just like it is here, the market progresses upwards on the highs and lows, but the momentum is weakening. The momentum of the highs, is actually going down. So we can tell that there is some disturbance, right? There is some disruption in the trend, okay, and early potential like a weakness signal. It's not even something that I would bet all my money and short this entire market with all my money ever, because I don't short the market to start with in a bull market. Okay, but instead that just gives me the information, okay, that whatever happens, like the market tells me that its price is going up, but its momentum, its power, its strength, the trend strength is going down a bit. It's not any overly extravagant, okay, but it is, significant because it's showing. Okay, so the way I read it is, keep taking profits. Okay, this is a place in the market that you could want to take some profits off the table. And as you know, I've been taking profits for a long time already. Okay, I've been taking profits for a long time already, and this is just another confirmation. Okay, is this the end of the bull market? It does not look like that at all. Okay, so I wouldn't expect, despite it could be a local weakness, I wouldn't expect it to flip into a bear market structure or structure per the demography. I see many people use the word market structure. I want to just very quickly refer to that. But the truth is that the market structure, the market is structured. It consists of people. Okay, The market is the space, let's say, between the two participants of a transaction, between a buyer and a seller. The space around them, the environment that they are taking this trade, in. Okay, this is called market. Okay, so knowing that the market is structured of people and the environment. Okay, so it's not the market structure. Let's say many people confuse the market structure with market trend. The market trend is upwards when it makes higher highs and higher lows, and the market trend is downwards when it makes lower highs and lower lows, or it's sideways when it doesn't fit in any of these. Okay, then it at times forms some patterns like symmetrical triangles, ascending triangles, whatever you name it. Okay, so there is a difference. Although, if you know, you can use it. Okay, and if you know how to use it to make it work for you, then good for you. But just please remember that the market structure relates mainly to the market demographics. Let's say that the crypto market consists of mainly of the younger age people, versus the grains market like soybeans, okay, or wheat or oats or something. It consists mainly of the middle-aged average trader, okay, something like this. Or there's like 80% or 90% domination of the men over the women in the market of crypto for many reasons, okay. And there's, let's say, the cosmetics market, okay, is perhaps mainly, or biotech market is filled mainly, I don't know, with women to some extent, okay. So that is guys what I definitely want to make you more sensitive to, okay. Let me know very quick, because as I said, I can see a lot of comments being pretty much like put on. I also want to kindly remember, to remind you, so that you guys, if you're watching that, and if you find it valuable, just make sure to put a thumbs up and comment video with some of the questions. Just make sure you subscribe and put the bells on so that you stay updated with the upcoming videos lining up for the rest of the Congress. Okay, this is the very 14-day free 200K 14-day free trading Congress for you out of 200K celebration. So moving on, okay, RSI is one of the points that I also want to just get you. I'll need you to excuse me for 1 second. I'll be right back. Okay, let's see, and let's proceed. The next indicator that I also want to show you guys. I didn't go to the toilet too, no worries. I need to very quickly just occasionally check, compare with the YouTube stream so that I can confirm that everything is just fine on the technical side, on the backend. I want to bring to the point the momentum, the momentum indicator partially yes as well, but the technical tool that really works, which I personally use right now on the most daily basis, that I trust and rely on with all my money, okay, and that is nothing else but Birbicator Pro, okay, and the Birbicator Pro is just this very beautiful tool, and it is it is not a shill. I'm not urging anybody to get it because, we are rising prices anyway, and by double, because it's been definitely too cheap, and the demand has been too huge for that. So we're going to limit down the amount of people who can use this system. But I want to bring this point because it completely changed my trading since January. Before January, I was a full momentum trader. Okay, I was a full momentum trader, but being a momentum trader means that you are making some exceptions. Okay, momentum trading is about catching the dips and catching the tops. And as I referred in the very beginning, okay, it is a very hard thing to do, and it limits down your win rate, limits down the amount of your wins in the series. Okay, because when you try to anticipate the exact top or the exact bottom, that there are high chances you're going to miss and be wrong on that. Okay, but at the same time, if you are right on that, okay, then it means that you're going to to be richer. Okay, so you pay the cost of being wrong more often in favor of getting early into reversals. Okay, and that is something that I personally learned that would stopped working in this very advanced bull market stage for me. I remember I was stressing out very big time, in January about my portfolio going up or down $50,000 a day or something. Right now, by using the B Pro, I can allow my portfolio to just go up or down 200,000 daily, upwards, downwards, and I wouldn't mind that, because I know that it flipped the ratio for me. It flipped the ratio, which means that out of the momentum trading and getting early into a trade but being wrong more often, I kind of like flipped that. And by flipping that, I mean that I started, paying more attention to the win rate and focusing more on the winning trades, paying the cost for missing out on the bottoms and tops. So I have switched to become a trend follower. Okay, and momentum trading is called fade trading. You are fading the trend. You are getting on the board early. Okay, you are getting before the others, but you pay the chance of being wrong. Here, on the other hand, okay, is so that when you have confirmed that the market reversed, okay, as a momentum trader, you would discover some divergence, some bullish divergence, let's say on the momentum oscillator against the price. And this would mean you are getting into a position somewhere over here. Okay, which means that you still have some downside potential. You're never going to catch the perfect bottom or a perfect top. Okay, so especially if playing leverage, it's very important to be a trend follower. I don't personally trade leverage, okay, but I still use the trend following system in this very case and concept to be able to just get bigger win rate, but with less ROI, with less return. Okay, so by being a trend follower, I'm waiting for trend confirmations, for trend reversals, okay, to be confirmed. So which means I'm resigning from catching this area for the sake of joining into a confirmed trend somewhere over here. Okay, so this is what I'm losing, and still this is what I am winning. Okay, if I were a momentum trader, then I would get this, okay, but more often I'll be wrong. So in this case, I prefer to be wrong less often than more, but for the sake of getting less ROI. Okay, I'm joining the trend later, which is why the B Pro has been confused so many times in here. Kind of because the sideways trend, this is the low momentum sideways, okay, that I was showing to everybody a couple of minutes ago. And this momentum is directionless. It's lacking the direction. As opposed to an upward trend, okay, or to a downward trend, the sideways trend, it can go up, down, just left, right, fucking backwards, upwards. You never know, okay? And that is the worst part, which is why so many Wall Street traders, professional traders, floor traders, and whatnot, they don't even pay attention to sideways. Okay, because the only case that you can play the sideways well is that you catch the bottoms area or the highs area, but then you're risking you can be wrong. Okay, so playing the sideways, trading the ranges, the sideways horizontal movements, okay, is first of all very hard, and it's usually of little profitability, especially if trading leverage. Okay, so here I really want to guys show to you that the only case that you could safely play ranges is by catching the bottom area, the range lows, or selling the highs area, sell the range highs. Okay, let me know very quick if that is something that you guys understand so far. Okay, let me know in the comments very quick if you if you are grabbing this content well so far. Okay, there are about 270 live viewers. Okay, so that is very, very good to see, guys, that you're interested in getting the knowledge and collecting the knowledge and making it everything better for yourself. Okay, kind of reminder to subscribe to this channel as well, to the Birb Nest. This is the only legit channel, again, on our YouTube. And if you want us to play more of these and pretty much like just give so much more of the free content with you guys, okay, then make sure to subscribe and put your thumbs up and comment so that we get the YouTube algos pumping our accounts so that more people can learn before they get fucking wrecked and destroy this market. Okay, and there's some nice comment. Michael Surfer, been doing this for the last few days and managed to pay off the exclusive membership and be pro. Good for you, buddy. Congrats. Oh, I lost so much time doing all the stuff for the free subscription. Well, products, yeah. There are so many questions in here in the chat. I'll try to answer some of them at the very end of the show. But guys, I really want to also remind that in the description to this very video on YouTube, you can actually apply for a giveaway. And I'm giving away 1 month of premium membership, of the exclusive Nest Club membership subscription in the Birb Nest for free. Okay, and the only thing you have to do is you go and search for the link, for the giveaway link with the gleam, right in the description of this video, and apply and just play with it. Okay, and you stand quite a big chance of actually winning the jackpot. Okay. Okay, let's proceed, shall we? And this Birbicator Pro, let's just bring back the picture. This Birbicator Pro actually is a trend following system. Okay, so back in a case when you play the ranges, which is or directionless movements, which is well, this. Okay, you know it's sideways, but it doesn't look like an uptrend, making higher highs and higher lows. And it doesn't look either like a downtrend, which makes lower highs and lower lows. Then it has to be sideways. And those sideways at times form some patterns, right? For some patterns like this here, for example, some bull flag, right? Like this, or some head and shoulders pattern, like left shoulder, okay? The head, the right shoulder, okay? And so on and so forth. So at times it does form patterns, but not always. And this B Pro, the way I use it personally, okay, is I apply a lot of lag to that to be able to increase my win rate. I want to increase the amount of wins that I have. At the same time, agreeing to kind of like filtering the space, which means if you use any indicator or any system, and I mean really any, okay, then what you're getting is a lot of noise. So if you look at it this way, then all of those, okay, are mainly noise. You could see some, or well, if I were to be the realist about that, then I would have to well, just turn off the additional filters that I have, and this is the amount of signals that you would get. Or those are not necessarily signals per se; those can become signals, okay, but those are the trend change indications, just like it suggests in here. Enable baseline trend change signal, okay? Trend change indications. I personally choose to apply the whole additional layers of additional indicators that would need to kind of like check the box for, okay, to be able to print any signal or any indication on the market for me. But I use this in two ways. Firstly, as a trend follower, and as a trend follower, I use this baseline. This baseline is a hybrid average, okay? It doesn't matter much for what kind of hybrid average that is, because it's kind of like complex, right? It consists of, well, complex tools that you're not going to find anywhere else. It's an original idea, okay, that we had with Signalify, the co-author, who designs the systems professionally for the hedge funds. So this is a very powerful tool. And long story short, I use the baseline to know about the direction. Right now, if you turn off anything else but the baseline, let's say, okay, so let's just give it a go for the simple to just display the baseline. And we can even turn off the Bitcoin chart. Okay, so what you're left with is this kind of like a squiggly line curve. It's not really straight upwards like here, or straight downwards like here. Okay, instead it's like this low momentum shit. Okay, it's like nothing. It's just directionless, and it swings you back and forwards, losing money so often. Okay, so I use this mainly as a direction indication. Okay, and that makes you a trend follower, because I would never short anything whenever this line goes up. Okay, the only cases, although I'm a huge opponent to shorting, that I would short anything is when this goes downwards. Okay, but then when this goes and moves in low momentum movement like this, right? You see the difference, I hope, between this and this part, right? So it's like this and that, right? Something like this. There's a clean difference, and whenever that happens, I apply additional indicator, which is the volatility. Okay, and the volatility measured per the ATR-based volatility bands. Those are not Bollinger Bands. Okay, those are ATR-based, average true price-based volatility bands, which suggest to you, okay, that current expected volatility of Bitcoin for the next following days has the highest chances to be between $62,000, which is the short long range band up on the upward side, and $48,000 approximately, which is the bottom of this kind of like a range, right? So this entire size, okay, from one band to another, this bandwidth just tells you about what kind of volatility you could expect with the highest dose of probability. This dose is highest of certainty. Okay, although nothing is certain, of course. But this tells you, okay, that, okay, whatever happens, most likely, okay, this point is going to be the most neutral, because it's going to be equally distant from, equally distant usually from the baseline, okay, on the top and on the bottom. And I would never want to make any decision in here in the neutral point, right? And this being a trend following breakout system, trend following for applying the average, and the breakout system for the volatility, well, if I see a Bitcoin pump that actually pushes and pumps through the upwards range, the upwards volatility, I would know that this is the moment that Bitcoin is going to $90,000 to $120,000. That would be the clean signal for me, okay? Because it's been going sideways so far, bouncing off those levels too often. Okay, those average volatility levels, as you can tell. Okay, it's a very successful picture, if you will. So whenever I see an actual breakout, which is a breakout over the average volatility, which those lines represent, okay, I would know that this is the reversal. Okay, and again, for those asking, okay, there is a special discount code, which is being displayed quite often on the screen. Okay, Aperture, my co-host, would try to probably display that for you right in a second. Okay, but this is Birbicator Pro is something that you can get. Okay, you can get with crypto, of course, and the fiat. But so if you actually want to go there, okay, here's the direct click so that you can actually just go and check out. But I'm not going to force anybody, because the amount of people that be able to use it's still going down. So I'll take it or take it or not. We're like this is a whole entire ecosystem that I use for my trading, which works perfectly well. Okay, which like, for example, with the Ethereum pop, it actually just broke 2 million on my short-term account, okay, with the help of bPro. So that is definitely quite a big piece of successful system that just simply works, okay? So the bPro setup, to wrap it up, okay, for the TA section, the momentum and the bPro setup with the lot of lag, with a lot of filters on, okay, with the system that is tuned for the trend following breakout, okay? Trend following for applying the average, and the breakout for applying the volatility. That is the tool that simply works. Then let's move very quick to the fundamental analysis section, okay? And before I find that, I really want you to understand that Bitcoin is different from the fundamental point of view that most of the, let's say, stocks or shares, okay? Because there are no people behind it per se. It's not centralized, right? It's not a company. It's a decentralized ledger. It's a decentralized system. So the only fundamental value that it has proposed is it's connected. It's connected with halvings. Okay, with halvings, and the reason for that is, well, if we will, let's just see that very quick. Okay, just want to find the chart very quick. Okay, got it. So please have a look. This is actually from investipedia.com. Okay, this is a halving chart. So halving is a phenomenon that is programmed, that was pre-programmed, in the Bitcoin technology, okay, for the blockchain, that concerns the mining difficulty, and the mining difficulty increases over the time. Okay, the mining difficulty increases over the time, or it also fluctuates, of course, on some daily and weekly basis. But most important point of view is that we so far had well, 3 halvings. Okay, this is an old chart, of course, right? Because it actually just corresponds here with the drop to $3,000. Okay, so this is actually missing out this entire section in here of the movement, but that's not important. The actual halving actually happened like a year ago. It was 19th of May, if I recall well. It was actually like an entire year ago, and ever since, okay, for the entire period of Bitcoin's history, for the price chart, you could see that after each and every single halving, Bitcoin went up very hard, very big time. Okay, so knowing of that, you can tell that there is fundamental dependence between the halvings that appear and the Bitcoin's price, and this comes with the block rewards, okay, and the mining difficulty. It means that after each and every single halving, the block rewards are cut in halves. Okay, so they are cut in half. So the mining process is less and less, pays less and less to the miners. So the mining difficulty just increases. And because of that, okay, we are approaching, the closer we are to the maximum supply that is ever going to be created for the 21 million of the coins, of the units that Satoshi programmed for the technology, okay, then we would really have the situation when there are so many miners trying to literally just rip off tiny chunks of Bitcoin, okay, from one another, just for the sake of having it. So this mining difficulty fundamentally increases boosts the demand over the time for a single unit of Bitcoin. Okay, then on top of that, you have, of course, the overall infrastructure, the regulatory infrastructure, the law, the low aspects, the overall, influencers or the key opinion leaders like Elon Musk, shilling Dogecoin on SNL, right? Saturday Night Live or something like this. Like this all creates an fundamental environment for Bitcoin to go up. But then when the next halving comes, okay, in a couple of years, then what are you going to learn is that whenever there goes a very, very negative kind of like a sentiment of whenever the word is very bearish in Bitcoin, and then we approach the halving, then this could be a potential reversal sign, historically speaking. And history is the best teacher, which makes us believe that this is one of the right approaches. Okay, so from a fundamental point of view, we are talking about the halvings, the mining difficulty, okay, and how each and every single mining difficulty increase, and the halving even just increases the demand, okay, for the scarcity. Bitcoin becomes more scarce, right, over the time. That is the entire fundamental point of that. And moving on very quick to the on-chain analysis, okay, which is the third form of analysis that I use of the entire set. I really want to very quickly show you guys my favorite tool, okay, two favorite tools. So firstly, this is NUPL. This is something that many people already know about that, okay, because I hosted so many shows about this tool already. But NUPL is a net unrealized profit and loss. Okay, whenever it is in green, whenever in the bull market, it is net unrealized profit. Whenever in the bear market, it's net unrealized loss. And the truth is that, historically speaking, whatever occurs over 0.75 comes with the market reversal on the global scale. Okay, here 2017-18 market reversal to the bear market. Here, okay, 2013 to 14 bear market started with the NUPL being exceeding 0.75 ratio. Another major reversal, okay, happening over here, at least for some local peak. Okay, it was like a tiny pre-bubble burst, something like this. Okay, and then you have the final set, okay, for the very first bubble in 2011 that would burst, okay, from $31 down to 1.98. So knowing of that, whenever you historically expect Bitcoin to go up with the NUPL ratio, right, over 0.75, this is time to run and aggressively scale out with the market. You are never going to predict the top with the perfect certainty or the perfect timing. You're never going to sell the top or sell the bottom, because that's not you who reverses the market and buy the bottom, okay? The market is being reversed by whales, by an instant shock coming from demand shock or supply shock coming from the institutional players. Market reverses because not me with my portfolio, or you guys, or average person with $100 portfolio drops Bitcoin and apparently magically market reverses. It's just because somebody decides to dump 100 billion or 200 billion in a matter of 1 hour, okay? And the other way around, if somebody wants to, very aggressively scale into a market, let's say Warren Buffett, if he decided to scale in on the market whenever that was $3,000-$4,000, okay, and they wanted to let's say increase their holdings to 10 billion or 100 billion, they will need to boost the price by a couple of like 30, 40, 50% perhaps back in the day. Okay, so those are the people and events that reverse the market, not you, not me, not an average Joe trader. Okay, the knowing of that, you cannot count and really, believe that you're going to reverse the market and call the bottom or call the top. Okay, it's like less than lottery chances. So what you do is you have to take time, and when you see the market sustaining trading over here, okay, meaning that 0.75 ratio means and tells you that the overall 3 out of 4 pieces, 3/4 of the entire market cap, of the entire market size is unrealized, is unclosed, is being they're put on the table in the loot. Okay, then this gives the whales the liquidity pool they need to enter the market, to exit the market. So we see the very late market stage right now. Okay, historically we are here, so we are in the phase that precedes the top. We are not going to reverse like tomorrow or today, but in the next couple of months, most likely I would expect November, December of this year, I would see $30,000 to $40,000 to $50,000 down candle that would reverse the market in a single day. And until then, I will have already scaled out of this market following this. Okay. I also want to bring, well, out of this on-chain point, because we need to rush in time. There's another show lining up in a couple of minutes. I want to, guys, make sure that you are sensitive to on-chain analysis and on-chain data. Okay, so there are many other forms of analysis using the on-chain. Let's say the number of daily addresses. Okay, if you want to apply some averages, then you can tell, for example, how it aligns the addresses generated with the overall price action. Whenever there's directional alignment, this is in favor of the price, right? There is quite some misalignment so far. So it's another on-chain sign of weakness of the market that you could see coming from this movement as well. Okay, so the third point is an on-chain. And the fourth point, very quick, is something that I use, which is called Fear and Greed Index. Okay, and this Fear and Greed Index is, as a matter of fact, great indicator to know when the market is extremely bullish or extremely bearish. Right now, you can tell, okay, that we are today about 72. Okay, this is the exact level. So it tells you that, okay, anything over, okay, well, over, if we will, 90 historically has brought at least some deeper reversals. Okay, so this was 2019 peak. Okay, you can see that the market does not really often hop in this area, but when it does, it's usually coming with some local retracements. When people are extremely bullish, it means that everybody who were to buy, they already bought. So if everybody bought, there is nobody left to buy. So everybody got what they wanted. So if everybody got what they wanted, the cycle starts kind of like flipping down towards the sellers, okay, which is where the retracement starts. Okay, it doesn't need to bring the final reversal, let's say, the bear market just yet already, okay, but it tells you that whenever it goes over 90, okay, then this is a very strong reason to take some profits. And the other way around, whenever it dips thoroughly, whenever it dips a lot, like, you know, like let's say this here, or anything below 10 or 20 is an extremely massive buy opportunity, in my opinion, okay? So this Fear and Greed Index is a fourth tool out of 5. Well, not necessarily related to technical analysis per se, although, as you can tell, you can still apply some analysis, you know, statistical analysis that is compliant and, should I say, just aligns well with the overall concept of the TA. And then the last and final point I want to bring with you guys is the intermarket analysis, okay? And the intermarket analysis is something that I use. And intermarket analysis is, well, I actually will show you very quick example. Just let me find it on Twitter. It was actually a post that I did on Twitter. Okay. There you go. There you go. Okay, this is my tweet from 27th of February 2020, so right before the pandemic started. And I wrote, 2018 CEOs stepping down rapidly and BTC emerges. 2019 and 20 global CEOs stepping down rapidly again, okay, followed by the DGIA and DGTA bearish divergence. So we are talking about the intermarket analysis and correlations with the other markets, okay? So here, Dow Jones Industrial Average, okay, started diverging, just like it says and shows in here, against the Dow Jones Transportational Average, which is fundamental reason for the global trends, uncertainty and instability, which was exactly before the COVID crash happened. So posting this tweet, I actually got to inform everybody early about the upcoming crash. Okay, and well, what can I say? I can just leave you with the link because that was the tool that I used, the fundamental, the real biggest kind of like this most important fundamental concept and principle of technical analysis being part of the Dow Jones, okay, which tells you that for the trend to ever continue, there must be a directional alignment between the Dow Jones Industrial Average and Dow Jones Transportation Average, and they started diverging. This told me about the fundamental threat on the market, okay, which was about to crash. And that is my set of 5 tools, okay, beyond technical analysis as well, that I use to be able to predict the major market reversals, okay? TA, Momentum B Pro. FA, I use halvings, okay, and the mining difficulty. The on-chain analysis as the third one is NUPL, okay, is the hash rate, is the wallet addresses. Then Fear and Greed Index as a sentiment factor is the fourth tool, and the fifth tool is the intermarket analysis and correlating Bitcoin's situation with the entire market, just like it did with Dow Jones Industrial Average and Transportation Average. Everybody, there's another show lining up right after this one, so make sure, guys, you stay tuned and stay on the channel to make sure you subscribe and put your bells on so that whenever the show starts in a second, you'll get notification about that. Okay, I really want to thank you for participation, for being on this very show with me. Okay, to learn about the top 5 TA and beyond tools of the analysis tools that I really use and that really work. Guys, it's been my pleasure talking to you. I really hope you're finding value. And if you enjoy that, just make sure you subscribe, leave a nice kind comment and a thumbs up so that we know we can continue to share so much free content with you guys. And if you want to know more about any of the products of the Birb Nest, just of course, feel free to drop me a DM on Twitter. And I, guys, see you on the next shows of our amazing 14-day free trading congress. Guys, love you all. God bless you. Bye-bye.